Don't buy the SpaceX IPO until you understand this. On June 12th, the SpaceX IPO starts trading, and if the price jumps in the first few minutes, and it might, millions of people are going to treat that jump like proof. Proof that they were right. Proof that they need to buy. Proof that they are watching history happen and they cannot afford to miss it. But a first-day pop is not proof. It is noise. And noise is a terrible reason to hand over your money. SpaceX may be one of the most impressive companies on Earth. Maybe the most impressive. Reusable rockets, satellite internet from space, Starship, Mars. A company that turns science fiction into quarterly updates. I'm not here to tell you SpaceX is bad. That would be ridiculous. This video is about something much more dangerous. The difference between an amazing company and an amazing investment at the price you're paying. Those are not the same thing, and this is where normal investors get hurt. Because you can be right about SpaceX. You can be right about the rockets, right about Starlink, right about the future of space, right about the company changing the world, and still lose money if you pay too much. So before you click buy, ask one question. Not, is SpaceX amazing? That is the easy question. The real question is, what price already assumes SpaceX is amazing? Professor Paycheck. Bad drawings? Good money lessons. Let's take this IPO machine apart. First, let's talk about why everyone wants this. The excitement is real. SpaceX has reached a launch cadence that rivals entire national space programs. Falcon 9 lands itself on drone ships in the ocean. Starlink has more than 10 million users paying for satellite internet from orbit. Starship is the vehicle tied to the biggest vision of all. Humans going back to the moon. Maybe Mars. Maybe an entire space economy that still sounds fake even while it is being built. And then there is Elon Musk. Whatever you think of him personally, he is one of the most important business figures of the last few decades. Put all of that together and you get a story investors can feel in their bones. Rockets, Mars, AI, satellites, the future. That is why the SpaceX IPO feels different. It does not feel like buying a stock. It feels like buying a seat on the rocket. And that feeling is exactly why you need to slow down. Because when a company becomes a story, people stop doing math. And the math is where the trap is hiding. Here's the first thing almost nobody explains clearly. There are two prices in an IPO. Price number one is the IPO price. That is the price set before trading starts. In SpaceX's case, according to Reuters and the company's IPO documents, the IPO price is $135 per share. That is the headline number. That is the number people repeat. That is the number that sounds like the entry ticket. But price number two is the opening market price. That is the price regular buyers may actually pay when the stock starts trading, and those two prices can be very different. If SpaceX opens at $150, you are not paying $135. If it opens at $170, you are not paying $135. If it opens higher because everyone is chasing the same rocket at the same time, then the person clicking buy from home is paying the market price, not the headline price. That gap matters a lot. Because if you buy at $170 and the stock later drifts back toward $135, you did not buy early. You bought the excitement at a premium. That is why first day trading is so dangerous. The chart goes up. Your brain says, see, this is working. But the chart is not analysis. The chart is emotion in public. And on IPO day, emotion is everywhere. Now let's talk about the line. Because an IPO is not a room where everyone enters at the same time and pays the same price. It is a line. And retail investors are usually near the back. At the front of the line are early investors, employees, founders, institutions, banks, funds that had access long before the stock appeared in a brokerage app. Some of those people got exposure years ago when SpaceX was valued far below $1.75 trillion. They already took the early risk. They already got the cheap seats. The IPO is how liquidity arrives. Liquidity is a clean finance word that means somebody finally gets to sell. And again, that is not evil. That is not a conspiracy. That is how IPOs work. But you need to understand the machine before you step inside it. SpaceX has reportedly set aside a much larger than usual portion of the offering for retail investors. That sounds generous, and maybe part of it is. But access is not the same as advantage. Access means you are allowed to participate. Advantage means the terms are good for you. Those are very different things. If Wall Street opens the door wider than usual, do not just clap. Ask why. Ask who is selling. Ask who is buying. Ask who already made their money. Ask whether you are getting an opportunity or whether you are being handed the baton at the end of a relay race that already happened. Now let's look at the actual price tag. SpaceX is reportedly going public at a valuation of about $1.75 trillion. That is trillion with a T. At $135 per share, the IPO aims to raise around $75 billion. That would make it the largest IPO ever. It would also put SpaceX immediately among the most valuable public companies in the world. On day one, before it has spent even one full day trading as a public stock. So the question becomes, what business is underneath that price? According to Reuters, SpaceX generated about $18.67 billion in revenue in 2025. That is a serious business. Revenue is up strongly. Starlink has become a huge part of the company. The launch business is still important. The long-term dreams are enormous. But here's the uncomfortable part. At a $1.75 trillion valuation, SpaceX is being valued at roughly 94 to 95 times revenue. 95 times sales. That means investors are paying about $95 of market value for every $1 of annual revenue. For a company that, as a whole, reported a net loss of about $4.94 billion in 2025. That does not mean SpaceX is bad. It means the expectations are gigantic. A 95 times revenue multiple is not a normal price tag. It is a giant price tag with rockets drawn on it. For comparison, many large mature companies trade at far lower price to sales multiples. Even elite tech companies usually have to show extreme growth, extreme profitability, or both to justify numbers anywhere near the top of the market. SpaceX is priced as if a lot of future success has already happened. But it has not already happened. It still has to happen, and you are paying for it today, in advance, without a refund. Think about it like this. Imagine the best restaurant in your city. The food is incredible. The chef is famous. The tables are always full. Now someone offers you a small piece of that restaurant, but the price already assumes 30 years of perfect dinners. Every table full. Every night. No bad reviews. No recession. No chef leaving. No new competitor across the street. No landlord raising rent. No health inspection surprise. You might still believe in the restaurant, but at that price, the restaurant has to be almost perfect. That is what high valuation does. It turns a good business into a very demanding investment. And that is the SpaceX question. Not whether the company is amazing, but whether the price already assumes too much amazing. Now let's talk about Starlink, because Starlink is the engine doing a lot of the real work. A Starlink's not just a cool side project. It is a massive satellite internet business with millions of customers. It is one of the strongest parts of the SpaceX story. But SpaceX is not just Starlink. It also has launch operations, Starship development, big capital needs, AI-related exposure, expensive future projects, and according to Reuters, despite the Starlink strength, the full company still reported a net loss of nearly $5 billion in 2025. So one way to picture it is this. Starlink is a powerful engine, but it is pulling several very heavy cars behind it. Some of those cars may become extremely valuable one day. Maybe. But one day is doing a lot of work. And the IPO price is being set as if one day is already on the schedule. Now let's talk about the IPO machine itself. An IPO is not charity. It is not a friendly invitation from a company saying, please come share our future at a discount. An IPO is a transaction. The company wants money. The banks want the deal done. Early holders may want liquidity. The market wants access. And the price is set as high as the market will accept. That is the job of the machine. To raise money at the best possible terms for the seller. Not to make sure the person at home buying on their phone gets a bargain. This is why hot IPOs are so tricky. On opening day, the price can jump. The media reports the jump. People who did not buy feel regret. The regret creates more buying. The buying creates more headlines. The headlines create more regret. That is the loop. And by the time a regular investor says, I need to get in before it is too late, they may already be buying after the easiest money has been made. That does not mean the stock must crash. Nobody knows that. It means the first day pop is not a financial thesis. It is just the sound of demand meeting limited supply. Do not confuse that sound with truth. Now there's another thing you need to understand before buying any IPO supply. After a company goes public, not every insider can always sell everything immediately. There are usually lockup or resale rules, but the exact rules matter. And in the case of SpaceX, reporting around the IPO suggests the resale and lockup structure is not something retail investors should ignore. The simple point is this: more insider or employee shares may become available over time. And when more shares become available, supply increases. If that happens while the early hype is fading, it can pressure the stock. Imagine a dam. Behind the dam are shares owned by insiders, employees, and early investors. The water does not disappear, it waits. And when parts of the dam open, more supply flows into the market. If there are plenty of buyers, maybe the market absorbs it. If buyers are tired, nervous, or distracted by the next shiny IPO, the price can struggle. This is not a prediction. This is structure. And serious investors pay attention to structure. So before buying, do not just read the headline. Read the filing, read the lockup and resale rules. Understand when more shares can come to market. Because if you buy the excitement and then new supply shows up later, you may find out that you were not early. You were exit liquidity. That phrase sounds ugly. It is ugly, but it is useful. Exit liquidity means you are the buyer who allows someone else to get out. Again, that does not mean anyone is evil. It means the market is a machine, and if you do not understand the machine does not care. Now let's talk about story stocks. SpaceX is one of the most powerful story stocks ever. Maybe the most powerful. The story is not fake. That is what makes it dangerous. The rockets are real. Starlink is real. The ambition is real. The customer base is real. The engineering is real. But a true story can still become an expensive stock. That is the trap. A story stock makes people stop asking, what am I paying? And start asking, how do I get in? That is when FOMO takes over. The future becomes so exciting that the price starts to feel secondary. But price is never secondary. Price is the whole game. If you buy a great company at a reasonable price, you may do well. If you buy a great company at a price that requires 10 years of perfection, you need perfection. And perfection is rare. Starship could be delayed. Launch costs could surprise people. Regulators could slow things down. Competitors could become stronger. Starlink growth could be excellent, but not enough. AI investments could continue burning cash. The economy could cool. Interest rates could change. Elon Musk could remain spread across multiple companies. Any one of those things may be manageable. But at a huge valuation, the market may not forgive manageable. At a huge valuation, good news is expected. Great news is expected. Flawless execution is expected. That is why story stocks can fall so hard. Because when the story is the reason people buy, even a small crack in the story can change everything. Now here's the real question. What would SpaceX have to achieve for this price to make sense? Not to be interesting, not to be famous, not to be a world-changing company, to make the investment worth the price. At one point, $75 trillion, the market is not buying today's SpaceX. It is buying a very optimistic version of the next decade. It is pricing in Starlink growing enormously. It is pricing in Starship working. It is pricing in launch dominance. It is pricing in huge future markets. It is pricing in AI-related projects eventually becoming valuable. It is pricing in capital discipline. It is pricing in no giant regulatory disasters. It is pricing in the company turning an extraordinary story into extraordinary financial results. Maybe that happens, but every one of those is an assumption, and the higher the price, the more assumptions you are paying for. That is why the question is not, could SpaceX be worth more someday? Of course it could. The question is, how much of that someday is already in the price today? Because if the future is already priced in, then you're not buying the future. You're buying a very expensive receipt for the future. Now let's get practical. If you're thinking about buying the SpaceX IPO, here's the checklist. Question 1, what am I actually paying? Not what the headline says, not what the IPO price says. What price will I actually pay when my order fills? Question 2, am I buying at the IPO price or after the opening pop? Those are not the same seat. Question 3, what growth is already priced in? Does the valuation require strong growth, explosive growth, or miracle level growth? Question 4, is the company profitable overall? If not, when does profitability matter? Question 5, what happens when more shares become eligible for resale? Do I understand the lockup and resale structure? Question 6, am I investing or am I chasing FOMO? Be honest. If the honest answer is FOMO, that is not shameful, but it is useful information. Question 7, can I handle a 40 or 50% drop? Not in theory, in real life. If the stock falls hard after you buy it, do you still understand why you own it? Question 8, is this a small speculative position, or am I treating it like a sure thing? Because those are very different decisions. Question 9, have I read the risk section of the filing? Not a tweet about it, not a summary. The actual risk section. If you cannot answer these questions, you are not investing. You are guessing. And guessing with a rocket logo on it is still guessing. So what would a careful investor do? A careful investor reads the filing, especially the risk section. A careful investor does not confuse first-day price action with proof. A careful investor understands the difference between the IPO price and the market price. A careful investor sizes the position honestly. If they want exposure, they do not treat it like a guaranteed retirement plan. They treat it like a high-risk, high-expectation investment. A careful investor compares it to boring alternatives because a broad index fund does not have rockets. It does not have Mars. It does not make you feel like you are participating in history. But it also does not require one specific company to justify a $1.75 trillion valuation starting now. For a lot of people, boring is not exciting, but boring can be very profitable. And boring usually lets you sleep. Here's the final reframe. There are two questions. Question 1, is SpaceX amazing? Yes, probably. Question 2, what price already assumes SpaceX is amazing? That is the one that matters. Because you are not buying the rocket launches from yesterday. You are not buying the headlines. You are not buying the dream of Mars. You are buying future cash flows at a specific price. And if that price already assumes that almost everything goes right for a very long time, then you need to know that before you click buy. Not after. Not when the stock drops. Not when the headlines get quieter. Before. So when the SpaceX IPO starts trading and the price moves fast, remember this. A rising price is not automatically proof. A famous company is not automatically a bargain. Access is not automatically advantage, and a great story is not automatically a great investment. SpaceX may change the world, but your job is not to worship the story. Your job is to understand the price. Quick disclaimer, everything in this video is for education and entertainment only. This is not financial advice. It is not investment advice. It is not tax advice. It is not legal advice. IPO investing carries real risk. You can lose money, including all of it. The facts discussed here are based on publicly available reporting and IPO documents available at the time of recording. Numbers, valuation, trading conditions, lockup rules, resale rules, and company details can change. Read the filing yourself. Do your own research. And if you are making a serious financial decision, talk to a qualified professional who understands your situation. If this helped you separate the story from the spreadsheet, subscribe. Professor Paycheck explains confusing money stuff with bad drawings every week. Bad drawings. Good money lessons. I'll see you in the next one.